Welcome back to the Dividend Diplomats YouTube channel, guys. We are filming here. It is April. I don't even know what. I believe it's the 5th.
Yeah.
Repping some of the swag here, guys. We're on the road to 20,000 subscribers. So make sure you guys hit that button. But we're going to talk about two dividend growth stocks that are showing strong signs of dividend yields, especially as interest rates should be shaken up a little bit and coming possibly back down. We're not talking about banking today either. So I can't wait to dive into these two stocks.
I know everyone's like, thank God we're not talking about banking. But in all seriousness, these are two great companies. Some nice, solid, strong dividend yield and dividend growth. We're going to be pumped to talk about them. So we're going to run them through our Dividend Diplomats dividend stock screener, which has 3 metrics and a bonus metric. 1, PE ratio, less than the S&P 500. 2, payout ratio, less than 60%. 3, history of increasing dividends. And that 4th metric, that bonus metric, is the dividend yield.
That bonus metric, guys, because again, we're dividend investors. We're trying to help investors consider dividend investing because it's definitely a great way to build an income stream, one that grows automatically via dividend reinvestment if you have that turned on, as well as dividend growth. So the key thing is growth. And we love finding dividend growth stocks that grow their dividend higher than the rate of inflation, which now is somewhere in this 5% to 6% range, and is coming down thanks to the Fed for the continual increases up to almost 5% now is where we're at. Possibly one more coming in May, but we'll stay tuned. That's another video. But Bert, I mean, these are two great stocks that we're diving into. We're diving into the chemical industry. Yes, it's sexy. It's exciting. We're talking a spinoff from Kodak from back in the day. And then we're talking about our trusted friend, LyondellBasell, as well.
Yeah, the 2 sexiest stocks you're going to talk about. Move over Tesla, move over Google, move over FANG. We are talking Eastman Chemical and LyondellBasell. So that's what's going to be exciting here. Ticker symbol for Eastman's EMN. LyondellBasell is LYB. Performance year to date. They're actually, for being in the same sector, they have 2 very different performances. Eastman's down 0.28% year to date, while LyondellBasell's up 12.24%. Over the last 52 weeks, Eastman down 24%, LyondellBasell down only 5%. So one's clearly performing better than the other.
Clearly. And, Lyondell, I think their revenue is 4 to 5 times what Eastman Chemicals is, which Eastman's between this 10 to 12 billion revenue standpoint. Lyondell's in this 45 to 50 billion range on the revenue standpoint. Again, a lot of cash flow right now coming from these 2 chemical stocks.
And what's interesting, if you're saying it's 5 times on the revenue side, when you look at their market cap, the difference isn't as large. LyondellBasell's market cap's 30.7, while Eastman's is 9.7. So about 3 times the market cap compared to 5 times the revenue for there. Just an interesting.
Pretty interesting. Yeah. Well, what's going to be even more interesting is when we dive into the dividend metrics here. But Bert, do you own any of these 2 stocks?
LyondellBasell. We started that last year. I forgot. I can't even remember what stock we sold last year for my wife. We sold one and just moved the funds into there to get the pickup on the yield. That seems to be the theme. Is like I can't even
for the record, when Bert sells a stock or an ETF, it's to simplify. Usually he's not buying and selling based on swing trades or anything like that.
No, not at all. That's not the game. It's I'm tired of looking at a stock, a position. I just want to clean something up. So let's move them into there. And there's a good opportunity in a company like LyondellBasell where you can pick up some nice yield and some and at a great value. And that still seems to be true today. And you're going to see that as we go through the metrics.
Exactly, guys. And my wife owns Eastman, EMN, and I actually own LyondellBasell. So so we both got a little bit of both worlds here. But let's dive in. Again, stock prices are as of April 5th. We'll go through Eastman first. Again, spun off from Kodak back in 94. So still, less than 30 years old from a separate entity here. But man, you've got to love this stock here. I mean, because the metrics don't lie here. So, Bert, they traded $81.90 and to the community. Their forward EPS projections, when you look at the price to earnings ratio, which again helps explain undervalued or not undervalued, or one of the indicators, they're expecting $7.82. The PE ratio, the price to earnings ratio, is only 10.47 right now.
Interesting. Very cheap. Let's look at that payout ratio. Their annual dividend's $3.16. Divide that by the forward earnings. It's a payout ratio of 40% here. So perfect, right at the low end of our perfect payout ratio range, which is between 40 to 60%. Do you want to tell us about the growth, Lanny?
Yeah, hey, they've been growing dividends for over 9 years, pretty darn consistent at 7.71%. So again, almost at the double-digit dividend growth mark. And hey, 7.71% above the rate of inflation historically. And as of right now, no, we're not going to talk about inflation from 2022. The 8.5 to 9.5%. We're not going to get into that, but yeah, fairly solid. But Bert, you want to dive into the dividend yield as that cherry?
Yeah, their yield is 3.86%, so more than double the S&P 500. And when you couple that with the dividend growth, that is fantastic. So hey, very nice for Eastman. Let's summarize their metrics. P ratio 10.47. Payout ratio is 40.41%. 5-year dividend growth rate 7.71%. Increase that dividend for 9 years with that yield of 3.86%. We've seen Eastman. Lanny, you want to kick off that LyondellBasell stock screener?
Yeah, let's kick them off again. LyondellBasell is about 30.7 billion by market cap, and Eastman's a little bit under 10 billion. So again, as Bert said, about 3 times the size from a market cap standpoint. Trading at $94.27. Now, it wasn't too long ago where this was over 100 and maybe even closer to 80. So there's been some swings in the stock price, but analysts are projecting right now based on Yahoo Finance $9 in earnings per share. So when you do the math, the PE is 10.47. Now, Bert, why is that so funny?
Wait, isn't that Eastman Chemical's PE ratio? Have we ever had one where the PE ratios are exactly the same to 2 decimals? I don't think so.
I think this could be a first on the channel. So if you guys are seeing this right now, subscribe, give this video a nice thumbs up.
Pop that champagne. Let's get going. So let's see, are the payout ratios the same? $4.76 annual dividend. The payout ratio is 52.89%. Not the same, but still perfect. That's what we call it. It's Mr. Perfect.
Yeah, Mr. Perfect there. About 12% higher than Eastman. But looking at the dividend growth rate, again, according to dividendinvestor.com, which is a very helpful website, the 5-year DGR is 28.22%. But we have to remember there was a special dividend that LyondellBasell did last year with $5.20 in addition to that $1.19 per share. So that kind of gets mixed into the calculation. So it's typically not that high because of that special dividend, but from a pure math standpoint, it actually is.
Like Dividend Investor is the least helpful website you're ever going to use when you're looking for stocks. Kidding. No, it gives you all the great info you need and a lot that we pull in here from the metrics. So looking through that, they've increased 9 years. Let's check out that yield. It crosses 5%. Their current yield is 5.05%. So a nice premium there compared to the S&P 500. So let's summarize. Let's go through it. P ratio 10.47, payout 52%, 5-year dividend growth rate 28%, increase for 9 years with a 5.05% yield.
Hey, A is the best. Here we go, guys. So 2 dividend stocks here all have essentially meet the dividend diplomat stock metrics here. I might start buying more shares again in my wife's account for Eastman simply because it's got an above average dividend growth rate. It's got an above average dividend yield. It's got a pretty decent balance sheet. The current ratio is 1.16 right now for Eastman. Always look to be over 1. But that's not to say that LyondellBasell is too far behind, because theirs is actually even better. As of the end of the year, there's at 1.7x on the current ratio. But again, both do hold some long-term debt. LyondellBasell's got about, see if we look at the balance sheet really quick. LyondellBasell's got about 10.5 billion trending down, and Eastman's got about 4 billion also trending down.
Good. That's what you want to see. I mean, you kind of said it best at the beginning. The sector showing signs of undervaluation, and that's kind of what gets shown out here. I like your strategy of possibly picking and adding to your current positions. One day, who knows? I mean, I can see why you would. I'm adding to other positions for LyondellBasell, why not? If you have $100, throw a share on there. It's a nice bang for your buck there, especially from a dividend yield perspective.
Are you guys buying these two chemical stocks? Let us know in the comments below. What other stocks are you buying now that we're in April 2023? What's on your stock watch list as you're trying to pursue financial freedom, guys? For what else do the viewers need to do here now that they're on the channel?
Well, they're not with us, then they are against us.
Guys, that was Bert. Make sure to subscribe. Definitely like this video. That was the dividend.
Oh, I forgot about that, everyone. My bad. Well, then you know what? You said it again. If you're not with us, you're against us. I said it twice in this video. You better watch out, people.
Guys, that was Bert the Hurt and Lanny from the DD, over and out.